Good afternoon, ladies and gentlemen. It's Alan Barry Labucan here. I'm the founder and host of the Alan Barry Reports. And I have one of my favorite guests on again today, John Kaiser. John has, in the last couple of years, has been on a real tear as far as making some early calls into big discoveries. And lately, John's been doing a tremendous amount of work on the Australian gold rush that's happening regarding the potential of a Wits Watersrand 2.0. And so it's getting very exciting. John and I are both very bullish on the area, and especially on keeping the audience informed on what's happening. That's how people will make informed bets, and we want to help along that way. So John, thank you very much for coming on again.
Alan, it's good to be back so soon.
Yeah, well, you know, since I last talked to you, John, it's been kind of a flurry of shows for me. I had you on, then I had David Lenegras from Artemis, then Quinton Hina, and then I saw Artemis on Monday had news on a couple of fronts. So, you know, I'm trying to catch my breath here a little, John. Maybe you got some comments on what you've seen over the last week or so since we last spoke.
Well, the last week truly was a whirlwind of discussion, insights. Every interview I listened to by different people on that, there were some little snippets that came out that clarified the whole Wits 2.0 hypothesis more. Basically, I think we are looking at an incredibly substantial gold discovery. One of the themes that is emerging is how long will it be before we have a reliable method for measuring the gold content? And so the grade of these conglomerate beds, this is the biggest unknown. And what I did last night, and I published it to my website, is an outcome visualization for a sort of 10,000.
Before you get to that, I wanted to, I have a little surprise for the audience and you as well. We have a bunch of shows we're planning on doing together, and I'm proud to announce as of today that I have a new website sponsor in Artemis Resources. And Artemis Resources is now going to be a member of my website sponsorship program. I was hoping today I'd have a new banner up on my backdrop there. I'm also proud to say that when I do get that new banner up, I'm also going to have a nice spot in there for Kaiser Research Online, so that whenever I'm doing shows, people can know my sponsors and also can know somebody who I endorse fully for anybody in this space is John Kaiser and his Kaiser Research Online. So I thought I'd drop a little news on you there, John, before we get into the outcome visualizations.
Oh boy, I guess David's going to be both happy and unhappy with what I'm going to talk about today.
Well, you know, John, hold no punches. You know, my reports are, there's no holding back. If you've got things worried about, I think those are things the audience wants to know as well. So don't think you have to hold back anything from me, John.
Well, everything's an unknown at this point. For example, I've run the numbers. If you come in with, say, you know, 2 grams per ton as an average grade, this stuff is worth nothing. If you come in with something insane, like 30 grams per ton for like that footprint that's possible at Purdy's Reward, you know, you're talking like in Australian dollars, almost a $20 billion NPV. So the speculative range here is insane for this type of system.
And that affects several companies in that area, and that's sort of what we've been talking about behind the scenes, John and I. With in the past, John and I did a show we called the Zombie Search and Rescue Mission. And one of the things, we found a lot of really good companies, but what I liked a lot about those shows was that it gave us an opportunity to show people the tools that John has developed on Kaiser Research, which I believe are second to none for anybody that's investing in this space. And we're going to be doing a similar type theme towards these Aussie shows. John's working on the background, and it takes him a lot of work to get that ready. But then we're going to be running in the not too distant future, over the next couple of weeks, we're going to be taking that deep look into the Aussie play. And John, I'm going to switch to a screen share here pretty soon and let you sort of guide me how we can do some research already that you've started to prepare. So I'm going to turn it over to you, John. I'm going to turn on the screen share. You're good to go, John?
All right, so.
I'm on your website in the screen share.
Okay, I'm not seeing any screen share.
Oh, okay. It should be up now.
All right, so why don't we, I guide you through to get to the outcome visualization.
You know what, John, we can try this. If you have any problems with the screen share, why don't you just turn off the screen share? Sometimes there can be some technical difficulties. But if you put your cursor over on the left side of the screen, you're going to scroll up and you're going to see a menu appear. The second thing on it is screen share. And if you then you want to highlight in the background, I have to choose application window, and that shows me now what's on my main browser. I see you playing around with it a little bit there. So as you're doing that, John, I'll leave you to that. I'm going to go on, I'm on John's, oh, there we go. Okay, John, so go ahead. You've got the screen share in hand, and you can start. Maybe let me interrupt every once in a while if I have some questions.
Okay, well, my mouse travels around on this screen, but it doesn't highlight anything.
No, because you go to your background, go to your main screen. That's what you're actually on now. You're not, you're trying to move your cursor on the screen that our video's on. Oh. You want to get to the background.
The background.
Your main browser. That's what you're displaying, is your main browser. It's not moving.
I knew we should have tried this before going live.
No worries, John. We can make our way through it.
What are you seeing? I'm on my.
I see your first page. I see on your screen share. We can see the KRO spec value hunter. I can see your outcome visualization.
All right. Okay. So you can see. So what I'm going to do now is go into this outcome visualization link.
Yep.
And this is the place where I park my attempts at visualizing potential outcomes.
I'm going to go to that page too.
And then here I have sort of an example of SK. But we're going to scroll down, cut to the chase, right down to the Australia section.
Yep.
And here we see two links. The first one is the unrestricted one that anybody out there who's not a member can look at. And the bottom one here, current OV, that's the one where you need to be a KRO member in order to see it. And basically, this is the one that has all the assumptions in it. The upper one, that portion, what's on here appends to the bottom of that one. So I'm going to look at the whole thing.
Now, John, before you move on, I'm on the same page, by the way. One of the things I like about this snapshot you give people is I can quickly go and look, okay, they got a working capital of blah, they're fully diluted, that's what their current valuation is. I can see key people that are involved, I can see the chart. I'm seeing two charts, John. What is the difference between those? Oh, one's a narrower range.
Yeah, the left one is a long-term, probably a weekly range chart, and the other one's very short-term, so you can see the granularity of the last 60, 70, 80 days or so. And that's the one I watch most frequently because then I can see the ups and downs and so on.
Now, John, the next part is your visualization outcome. Purdy's reward, best case underground scenario. So tell us a little bit about what that means, your visualization outcome. I know what it means. I want the audience to know, because this goes into the stuff that I think goes into why it makes so much sense for people that are investors out there to follow you and be a member. So give us a little rundown on that, please, John.
Okay, what I have done is what every good exploration company does behind the scenes, and that is the equivalent of a back-of-the-napkin calculation about the potential outcome of the project that they have. And it's essentially the discounted cash flow model, where you imagine a deposit, you imagine a plausible mine and its costs for mining it, and then you get the net present value and say, oh, okay, if we deliver, in this case, say 80 million tons of 10 gram per ton gold, what would that be worth? Now, the companies have a serious problem in that they can't share that back of the napkin calculation with the public. They do it internally as a decision-making tool to say, how much more money do we throw at this target? Is what the target is showing us going to give us something economic? This is the concept of economic geology. And a major distinction between lifestyle juniors and the serious ones is that the lifestyle juniors have no concept about what economic geology is. They'll get some little outcrop with some high-grade showing on it, and they'll blow the trumpet about how wonderful this is going to be and so on, but they aren't really developing a
more interested
image of what they think is there.
They're more interested in something they can blow the trumpet about, not so much in building something real.
Yes, and the market's gone beyond that. It's not interested in stuff like that. It wants to see a geological context. It wants to see the arm waving, the how big could this be, and what is it worth. But the problem is the regulators don't let the companies do that. They say, you know, you can have a picture of your geophysical anomaly, you can put out a table of drill results and so on, but until you publish a 43101 resource estimate signed off by a qualified professional, you can't say anything. So that leaves the market out there just wondering, what does it all mean? For example, I got an inquiry today from somebody asking about, you know, Mawson published some high-grade surface values from its Rumpus project in Finland, and this person was asking, is this the next Novo? Well, if you read the news release, you realize, well, no, we're not talking about conglomerate beds over a huge area. We're talking about a traditional greenstone-hosted, you know, vein system. And I said this is probably more similar to what Orion Resources is doing at its Risti project.
What the person was really asking you, John, was, can my stock that I own in this project in Finland go through the roof like Novo?
Yeah, and you know, the Novo story, it's like absolutely huge, but it will take probably 6 to 12 months to really reach the zone where the world starts taking it seriously. And even if at the end of the day it ends up just as another 3 gram per ton Beaton's Creek, it will nevertheless have served as an inspiration. Nobody's going to have something as big as what Novo potentially has, but they may have a 3 million ounce, 5 million ounce system. Maybe it's only 1 million ounce, but very high grade. What Novo is doing is it's inspiring the audience to take seriously these exploration juniors. And what I'm doing here with my outcome visualization, I'm providing the tools to help the market, the investors, to take the bits and pieces that the company publishes and imagine, okay, different potential outcomes and see what they are potentially worth. And what I've done here with Artemis and Purdy's reward is I've done a best case visualization of what might be there. And I'll just show you quickly what I've done here. If you go to this profile here.
I see you've
Click
got
on it
80,
to get into
you've
the
got
cover
80
profile.
million tons at 10 grams. Underground, 10,000 tons per day, 21.9 mine year life, capex of 400 million. So you've pumped all these numbers in, John, and then you've done the revenue model, and this gives you a sort of a number, I guess, is what you.
Yeah, and just so to get people to walk them through this, here's a shot of the tracker I published last week, in which I recommended Artemis is a good relative spec value buy with a dollar target by the end of the year, assuming confirmation of grades better than 5 gram. So here is the graphic that Novo has published showing the Purdy's reward property. And what I've done is I've created
John,
a bit of a triangle.
Did you hit stop sharing your screen share, or because I'm seeing you still on the visualization for Artemis? Oh, no, you're okay. Go ahead. I think you're back on there. Sorry.
All right. I guess people. All right. Well, I guess we'll eventually get the hang of this. Anyways, this red trace here is what Novo has observed is where the conglomerate beds daylight, and they dip in this southeast direction. And there's about 6-7 kilometers here, and this is the kilometer stretch where it's exposed. And up here, it disappears underneath overburden cover. But you can pretty much guess that, yeah, the whole thing continues in this direction before eventually, flattening out. So what I've done as a best case, what if this entire triangle here has a conglomerate bed under it, capped by the Mount Rowe basalt, and you'll see here this particular graphic that they published, looking in that northeast direction, you can see the purple. This is the bed that slopes down.
You know what, John? You're for some reason you're not broadcasting at the moment your screen. You're talking about you're on the Novo news, and you're still, and I don't see that on my screen. Did you go up to that screen share thing again? Make sure you're on the proper screen share. For now, I'm still on your visualization outcome,
okay.
And that's what's up on the screen right now. Before we go back, I wanted to, the one thing that I think is brilliant about these visualizations that you do is, after John does all this number crunching here, he comes up with a number, and then you project that onto a chart for his Purdy's reward of JV outcome visualization. And this shows you a chart, sort of an arc of where they are in the development and what an appropriate valuation should be. And John, we've talked in the past about your S-curve, and I noticed that your S-curve, Artemis is just at the start of the S-curve, which is kind of surprising to me, being that this could be one of the greatest gold discovery areas in our lifetime.
All right, so Alan, I have no idea what's going on here.
Okay, you're not able to share your screen. Okay, so you should see, go back to the video where you can see me and we're talking to each other.
Yeah, so I see what you have there.
Yeah, you'll see on the top of it, you should see stop screen sharing. You can start all over again. Okay, now you're back, you're on the screen, I can see you. Now if you go back and do that screen share again, sometimes these things are janky, John, you just gotta work your way through it. Hit screen share, and then whatever's on your main screen of your browser, that's what should show up. So I'm seeing your Artemis, your S-curve.
Yeah, I think you're seeing yourself, your own screen.
Oh, I am, you're right. So we're having some problems here with your screen sharing, John. Stop sharing. No, you just brought up, what I see on the screen right at the moment, John, is the Novo Resources model of the gold
Okay,
bearing
this,
unit.
this is what I thought I was sharing earlier.
Okay, I can see that
You know,
now.
our audience is gonna hate us for like screwing around.
You know what, John? They get what they pay for.
Well, we'll have to do it again properly. But anyways, to backtrack, can you now see that?
Yes, now I see the Purdy's reward claim map. I see the projection of the gold bearing conglomerate unit where it comes to surface. Go from there, John.
Yeah, so what I've done here is I've done a calculation of the area of this particular triangle, which is all of which I'm assuming is going to be conglomerate bed. And the area is about 8.25 million square meters. That means for every vertical meter, that's 8.25 million cubic meters. And the magic trick in this game, which everybody who has any exposure to this junior resource space needs to understand, is the concept of how to estimate tonnage based on the meter volume of the target. So in this case, it's width times length times thickness in meters. That gives you cubic meters, and then you multiply by a specific gravity, and technically that's the number of times that a solid or a volume of anything is heavier than a cubic meter of water. So in the case of granite, it's about 2.6. In the case of basalt, it's 2.7 or 2.8 to 3. And what I've done is, because it's a mixture of sandy matrix and these basaltic mafic clasts, I've just sort of picked a 2.6. We'll eventually get a proper density measurement from Novo, but right now I've done a 2.6. So if you multiply 8.25 million cubic meters, you get about 21.5 million tons per meter. And then I said, okay, we have 4 meters of thickness. And one of the things that sort of came out in all the conversations last week with Quinton is that where it's only 4 meters thick before it's covered, paved over by Mount Roe basalt, it's all mafic clasts. And it's still not clear at what percent of the 15-meter thickness the quartz cobbles start to show up. But they've observed that where it's obliquely displayed at surface, when they move towards the top of the unit and quartz cobbles start to show up, the fossickers who have simply stopped digging little holes. And that is the main basis for the company's comment that in the upper part of the conglomerate bed where the quartz cobbles start to show up, there doesn't appear to be any gold present. But when you're in the lower part where it's just mafic clasts, there's little gopher holes all over the place that the fossickers have done. So this metal detecting activity has, in a sense, illuminated this red ribbon that you see there, and right to the edge. As soon as they stop getting beeps from gold, and you know, what was that? He was giving you some statistics about the size of the nugget, you know, 1/10 of a gram. They can detect 3 inches deep, a gram 6 inches deep. So they're basically just detecting stuff at surface. And he says there's a group out of Dampier who has these almost meter-wide metal detectors, which can detect stuff a meter deep. And when we were on that, when I was on that site visit, he showed me some pits, like they've been dug a meter deep by these guys. And of course, they're not allowed to use any electronic or any mechanical equipment. It's just hand power. They got to use pick and shovel to bash away. And these guys are picking out some pretty big nuggets using this monstrously big metal detector. So what I've done is I said, okay, we've got at least 4 meters of thickness, and that's 4 times this 21 million tons gives us whatever 85 million tons. And I said, well, it's that's 80 million to mine that over, I'd say 20-year period, 10,000 tons per day would be the mine. Now back to this thing here, you can see this sort of angle. This angle suggests almost a 12-degree dip, but this may be just a local thing. By the time they reach the end of the property, like say right down here, following it down deep, that's about 2,800 meters. Theoretically, the conglomerate bed at 12 degrees should be about 600 meters deep, but quite likely it flattens, but it'll still probably be over a couple hundred meters deep. And I don't think we're going to see a big giant open pit developed here. So I've assumed an underground mining operation. So I take 80 million tons of 4-meter thick conglomerate bed here, and then of course, what is the grade question? And then I want to go back to where we were here with the outcome visualization. And so this is what I was talking about earlier, is you imagine a deposit size, and then you start looking at the different grades. So here, I've come up with a 10 gram per ton grade. Recovery, I assume, is going to be 94%. The refining take will be, 2%.
Notice, John, if you go, that's for KRM or all members, where they can just fill those things in and run this automatically, like a spreadsheet.
Yes. So let me just walk through this. And
sure.
I've then gone down here. Okay, so here's the 10,000 tons, 22-year mine life. The tax rate in Australia is 30%. There's a 2.5% royalty on gold in Western Australia. They've proposed to increase it to 3.75%. It's as if somebody in the government believes in the Wits 2.0 hypothesis, that there's going to be like 20 billion ounces here and is moving quickly to make sure they get a bigger share of it before all hell breaks loose. 3.75% is pretty stiff, especially if vendors underneath end up having 2-3%. It starts being like an African type of scenario. And then here's the cost scenario. Now what I've done is I said, well, Hermosa Taylor, the PEA that Arizona Mining put out for that underground mine, that's a 10,000 ton per day underground operation. It does have a shaft, which is more expensive. In the type of scenario we have here, we'll probably have a decline to access the underground portion. Obviously, the part that's close, that daylights, could conceivably be strip mined, and so you don't have to do underground mining. But I've just to say, okay, let's just take a worst case scenario for the mining scenario with a best case scenario for the tonnage. CapEx 400 million, sustaining capital 200 million, $40 a ton mining, $15 a ton processing. It'll be fairly simple flow sheet. So basically $60 a ton to underground mine this stuff. And then here's the other interesting thing is I've broken down all the risk factors into these different categories, ranging from environmental permitting all the way to financing. And I look at it and I assign it a low, very low, high, or very high risk. And we've got these risk weightings. And then when you add them all up, you get a percentage, a discount rate. And so that's how I come up with a risk-adjusted discount rate. None of this 5% BS that everybody uses to run their discounted cash flow models. In this case,
you've actually done risk analysis the way it's supposed to be.
Yes. So for technical, I've said very, very high, because the biggest question is, how do you measure the gold in a system where it has a coarse, original distribution, and then a mechanical resorting problem? Because if the precipitation theory is correct, this gold would have dropped out and formed these nuggets on the seafloor, possibly in and amongst the microbial mats, but they would have ended up through time been rolled around by the tidal wave action, the currents on the sand, and you would have this winnowing where the smaller stuff ends up in one area and the bigger stuff ends up in another area. And this is emerging as a probable obstacle to the idea that this fine gold component that we saw in that 2 by 2 meter pit with the 542 kilo sample, it's probably not going to be systemic through these beds. It'll be, and Quentin's also already said, based on some local panning activities, sometimes they get just nuggets from bashing up the rock and crushing and panning it. Other times they just get the find gold out of it. So this random redistribution of the nuggets on the seabed floor, coupled with what was maybe originally a log normal distribution of
that's what's
nugget
gonna
growth
make it
size,
cool.
this is not like kimberlite. This is worse than kimberlite exploration, where the stuff ends up randomly mixed in the kimberlite, and you do your, geostatistics. So this is a very big technical problem for this project, as how you will reliably measure the gold content of these beds without blowing your brains out with cost. In effect, the ultimate cost is actually mining this stuff. So again, the Wits 2.0 hypothesis with its precipitation theory, these things are not just trivial academic things to argue about. This is a theory which argues for massive lateral presence of gold. And it's possible that over time, they will develop ways of measuring other things like maybe osmium or something like that, other marker elements that are in the system, and develop a probability basis for saying, if we have this in these types of beds with this type of distribution of class, of different types of class and so on, we will have likely a gold grade of such and such. And that could eventually become the basis for saying, yes, we can risk sinking a shaft down. And this is especially an issue when you go deeper to measure the deeper stuff, because you're not going to drill 1,000-meter 17.5-inch holes to grab a 4-meter segment of stuff for bulk sampling. That's not going to happen. But the Wits 2.0 hypothesis suggests that we could see these gold-bearing conglomerate beds not just stretch across a couple hundred kilometers at the northern end, but also 100 kilometers down the dip of the basin. So anyways, back to this thing here.
It down like this, John, you're giving a, like you say, a rational hypothesis here. You're not sort of going just crazy off your top of your head. And so what now you're getting down in your screen, and I'm seeing that you're getting close to where we start talking about the chart. And I think that's where people really start to get the beauty of what you're doing here, because all those calculations you're doing ultimately end up with a number on that chart. And that's had my interest for a few years since you first showed me that, John.
Yeah. So I've come up with all these assumptions, and these are just speculative assumptions at this point. Tomorrow could come a news release that changes it, or somebody could tell me this cost is really stupid, it should actually be this, or here's a problem, and on and on. It's an iterative thing. We're dealing with very, very limited information, but we still need to come up with what we think is plausible, or what we want to see. In this case, we want to see maybe this scenario of 10 gram, but I also want to know, if this particular configuration is correct, what is it worth? And so I've run the discounted cash flow model, and here you can see this is a breakdown of what would be in your spreadsheet if you were doing it in Excel. You can see the recoverable revenue, the smelter recovery costs, how much royalty that would generate per annual basis, the mining costs broken down. Then you see the pre-tax cash flow, and then the after-tax cash flow. And here you see the life of mine stuff. So the discounted cash flow model simply takes the present value of each one of these years to the through the life of the mine, and it's the same in every year. In an actual feasibility study, each year will be different. They'll have optimized what grade they're doing, and then they'll have done expansions and so on. But here we're doing just simplified life of mine average scenarios, just to get a sense for, okay, what if we have 80 million tons of 10 gram per ton gold and are going to mine it at 10,000 tons per day, and that these cost assumptions are correct? What would it be worth? And that's where down here you see that the magic number is right here, 4.1 billion US, with an internal rate of return of almost 200%. So these are staggering numbers. And of course, this is not what Artemis should be worth. And what it really should be worth is this thing here. And this is what I call the rational speculation model. We're just here at discovery delineation. The fair value for something that's going to be worth $4 billion at the end of the day is 2.5% to 5%. And here you can see it in converted to Aussie dollar range. Here's a stock price range. And as you can see, it's at the upper end of the fair value range. So the market's pricing Artemis for what is a fair value for a particularly optimistic scenario. And this particular graphic here does it in I think it does it in US dollars. So
now, John, you're on that chart, and while you're there, I would argue that, okay, so that S curve is sort of, let's say, a very bullish scenario. Everything's going.
Okay. Let me stop you right there. Okay. The blue channel is the formal rational speculation model, and what you can say is this range. If at these different stages, as you're marching towards this outcome of, say, 5.3 billion Australian dollars as your after-tax NPV at 14.5%, as you reduce risk and increase the certainty about the outcome, your stock's value should theoretically wander, or at least the project's value should wander along in here. The S curve is a reflection of the market's refusal to be rational during the exploration development cycle. So what I've done here is sort of plotted the upper limit of what we observe. And here, as you can see down here, it actually ends up being worth less than what it should be as it goes into that boring feasibility demonstration permitting.
That kind of because, John, all the excitement was in the ramp up.
Yeah, it's this part here, discovery delineation, where you don't know the limit is where you get S-curve behavior. And Novo's already parked up here right now because the market's assuming the best case scenario. It doesn't know whether this is the outcome or something way up here. So it could be the fair value is this. And what I've created here is a way for investors to contextualize the pricing and the expectations of the market. Now, this number means $331 million valuation. That's what's implied by 550 million fully diluted Artemis shares at what is it at the stock price? 30 cents divided by 50% because we're adjusting it to 100% basis, and then converted into US dollars. So through the eyes of Artemis, ignoring all its other assets, the Purdy's Reward project is being priced at 331 million. And what I've argued is through the eyes of Novo, it's actually about 2.6 billion already. So if just that little triangle that I was describing became reality, it's not really going to do much for Novo because it's already in the S curve, assuming that this is going to be real. Whereas for Artemis, you would see it start moving up into here.
Artemis,
so that's why I said
more movement.
Yeah, it has more catch up to do.
Right, okay.
So we have a disconnect. The market's pricing Novo as if it has more than just that little triangle. And of course, they have the little series of triangles that comment well, but they also have all that down dip stuff.
Yeah, you know, when you started talking about this, John, I actually brought my Google Earth up onto your screen because now, say we start to make different assumptions. Say we start to look at, well, what if this does extend down there and continue over there, and this one shows that. That's why I wanted to get that Google Earth up there, because you could see a little bit of where they are. But I see you have it in that report there where you're scrolling.
Yeah, so are we still on my screen?
Yeah, we are. Yep.
So here's the sort of thinking I have. If this can end up being confirmed, something along the lines that I'm dreaming about right now, of course, that will send Artemis to $1 and possibly higher, because maybe it has stuff like that over here. And in the next episode, we're going to start exploring some of that other potential. But if this is as fantastic as I'm imagining in my outcome visualization, then this will probably be the same. This will probably be the same. And one of the interesting things that you managed to get out of Quentin in your interview last week is that this has already been granted. This here hasn't. They're still waiting for this, or even this here hasn't. Maybe this has, but this is already, they could conceivably start drilling holes here. But this is going to be deeper, you know, maybe a couple 100 meters deeper. So they're going to focus all their effort in this little triangle here. Right now they're focused in this area. They'll establish what this grades and all that, and we'll start getting the results probably from the large diameter drilling down here in probably early December through to the end of December. But they also have already taken 25 little samples along the exposed part where it daylights. And by the way, there's been a lot of confusion. See this stuff here? This sort of width that we see here?
Yeah.
That's when you have something with a shallow angle like that, its true width may only be 4 or 15 meters thick. But when you cut a horizontal across it, you end up getting all kinds of crazy widths. Like this is 100 meters along here. So this thing is not 100 meters thick. It's just cut at this angle, it appears. And what I think we're seeing is right around here is where the quartz cobbles start to show up, which is really only in the upper maybe a third of it. And down here is where you see just the mafic clasts in it. And when the beepers get to over here, this is called the upper part of the bed. This part over here is the lower bed. They stop digging little holes and just say, well, we're not getting any beeps. So this, what is a fairly big area here, which with quartz cobbles in it, has no gold, but down in the base. So it's the basal part of this thing that has the gold. So anyways, back to this thing here. If Artemis goes to $1, it will be for reasons that sends the stock, the Novo stock, through $10 towards $50 and beyond, because then people will extrapolate what they have here to all down here.
They're going to extend the gold bearing, the strike of the conglomerate at surface.
Yes,
and then the numbers go absolutely crazy, because the numbers you've generated off Purdy's reward there alone. I mean, look at that IRR. That's impressive, man. If that continues for another, well, it looks like they're only showing about 1/8 of the overall strike of that outcrop.
Now, what I can't show you on here, but what I've done is if I go and change this gram number here to 2 gram, the number is negative $155 million.
What if you change it to 15 grams?
To
a half an ounce?
Well, I did it for 30 grams, and it comes in at a staggering $15 billion US, which is just about 20 billion Australian. And if there's still only 550 million shares out of Artemis at the time, it has 50%. I mean, you're talking some insane number, $34. So I mean the upside for these aggressive 1 ounce per ton scenarios is so phenomenal that you can't even really believe them, which is why it's safer. I mean, that's why I said 10 gram, which is the Wits 1.0 average, plus or minus. Start thinking between 2 grams and 10 gram. Where is it going to shake out? And if it's just 5 gram, this thing is worth $1.5 billion or about $2 billion, which is still a home run. So what those numbers are going to be, and what exactly the tonnage is going to be, but the grade, that's really important. But when will we be in a position to believe the number, have a reliable number? And that is the most controversial and uncertain part about this story is, what does it take to have a reliable grade?
It's not just getting some assays back from the core or from the a large diameter. You're saying how much of that needs to be done in order to get to a realistic number of what the grade is? Because, you know, I've mentioned in the past recently, John, that you look at the situation with PDG Pretium up in British Columbia there. They had a grade, if you looked at their grade based on their drilling, and it's in one of these very high grade systems, and then they also did a 10,000 ton bulk sample. The bulk sample grade is proving to be more representative of the mining grade than the drill hole grade was. So I think that's what you're trying to get at there, right, John?
Yeah, yeah. So
we're looking at this visualization here, and it still looks, now the other thing that I really like about what you can do with your visualizations and then project what that should be worth or may be worth today is, if you look, I'm on my screen now, and I'm at the Google Earth, and I'm zooming into right exactly where they're drilling. People can see on the screen they're drilling right in here at Purdy's Reward. And if you look at that triangle John was talking about, you can sort of follow a projection of where that looks like it continues. You've kind of cut that off, sort of how much more, and that's the other thing, John, you can start visualizing other outcomes. Let's say, for example, that if you go to the southwest, it could go for this long, or messing around with the grades and stuff like that. That's what I think is really worth the money when people are looking at.
Now, Alan, let me point out something. You can see those sort of black stuff, like the fingers projecting north on the left part of your screen.
Yes.
Those are dikes. Now, those things come through the basement. They're near vertical. And those things are not interesting. However, the other stuff that you're pointing out with the, where you see all the sort of black stuff,
yeah,
that's the Mount Rowe basalt sitting on top and on top of the beds.
John, I'm going to go back and point where you're talking about on my screen so the viewers can understand what we're talking about. I'm drawing the right spot, right, John?
Aren't we on your screen?
I'm on my screen right now. You should see my cursor going across it. I'm following that projection you were talking about of the basalts.
Yeah, I don't see your cursor.
I got on the wrong screen. Sorry. Yeah, I should be. Can you see my my Google Earth, John?
Yes. Yeah, I'm looking at it.
Okay,
I just don't see you moving around on it.
Oh, don't worry. Go ahead. You were explaining about the Mount Ray basalts.
So the Mount Rowe basalt is that protective cover, and it came up through those sort of vertical dikes that you see there, and it ended up just flooding sideways, blanketing this huge region, and almost putting, it's like paving a seal on top of these conglomerate beds and protecting them. And when you head north, most of it's been eroded away, but you'll see still these little islands of basalt sitting in the northern area. If you scroll your Google Earth more to the north,
yeah,
towards
now
the water.
I've zoomed out a little bit, John,
Yeah.
and now I think you can see my hand is pointing to where you're
Yeah,
talking.
yeah, I can see it now. Anyways, one of the things that I'm like very curious about is what companies that are in the northern part, where it's mainly exposed basement rock that has no conglomerate potential, just the old-fashioned shear or vein structurally controlled gold systems, of which we've not seen a particularly great bounty in the Pilbara. Some of them may have these remnant islands of Mount Rowe basalt sheltering the conglomerate bed, and these things themselves could end up being 1, 2, 5 million tons, 10 million tons, not as massive as where we were imagining there at Purdy's Reward. But if the grade ends up being 5-10 grams per ton, you have one of these islands, you could end up having a 500,000, million ounce, 2 million ounce deposit. And this is going to be one of the interesting things. All these juniors that have land all over the place, they need to go there and physically walk their properties and remap it and sort of see if, you know, take their little metal detectors out, if there's conglomerate poking out.
There's a lot of that now. I've zoomed out a little bit more again here, John, and there's a lot of that Mount Roe basalt, eh?
Yeah, you can see kind of like the outline there as you're tracing it. That's the edge. And stuff under there probably has intact conglomerate beds. And if the Wits 2.0 precipitation hypothesis is correct, all of that is potentially gold bearing. But to the north, there will be still little islands, remnant islands of this stuff sheltering the conglomerate. Now, that's the big, wild, speculative thing. And, you know, De Grey, 130 kilometers to the east, has one of these. And there's something called Loudon's Patch, where nuggets...
Is it over here where I'm pointing now, John?
It's a little bit farther north. And
farther north, okay.
Just scale out. So it'll be farther to the east, you know, way to the east.
Over here.
By Indy Turner River, when you can get that to show up.
Okay.
That's where the Gray property is. And they have like 40 kilometers of...
But how far are they from Karratha?
It's like over 130 kilometers. It's when I saw that news release that De Grey put out, and I said, wow, this is the same Mount Roe basalt. This is the same sort of conglomerate.
So John, on my screen now, I've measured 130 kilometers from Karratha. Which direction? Up in here?
Yeah, in that general area.
Okay.
So if you have these nuggets showing up in conglomerates way over there, was there some little river that dumped a bunch of placer gold there and happened to do it at Purdy's Reward? Well, I think over time, as people take a closer look, they'll find nuggets, evidence of nuggets in these edges of these conglomerate beds all over the place. And that's going to be the kind of circumstantial evidence that will turn a lot of people into believers in the Wits 2.0 hypothesis. Now, that's just the scientific hypothesis, that there's an enormous amount of gold spread over a vast region that has been preserved for 2.8 billion years. The question we were talking about earlier is, what's the grade going to be? If it's 2 grams per ton, it's not very interesting. If it ends up getting up into 10 grams per ton, it's hugely interesting, especially given the scale of the distribution of these gold-bearing horizons.
Well, you know, John, I've watched a lot of drill holes out of Red Lake over the years, and you know, that's a similar kind of situation with these nuggets. And with the thickness of that bed, and you know, we don't know the distribution yet, so we still got to wait for that. There is definitely that potential that it could get those that 10 grams could turn out to be pretty conservative.
So we probably need to wrap this up because we're going way over the 30-minute limit. But I want to show you something. We'll have to send me back to my screen. Do I do that or do you do that?
You're there now.
Okay.
You're in charge.
All right. Now we just need my sluggish website. There's probably all kinds of people on it now, sucking up bandwidth.
We've crashed the system, John. I see Novo Resources is up there.
Yeah. That's where I was up. But okay, maybe. Okay, here we go.
We'll get the handle of this, John.
How big this site has become. Okay, so when you scroll down here, and we'll go through what this stuff is some other time, but you come down here, and when you see this little blue sign here, this is the logo for the Share Collective, where I am the founder, and I've basically taken my outcome visualization idea, and they have adapted it to a website. So when you click on this thing, and it's not yet commercial, and you need to be a beta tester to be able to log in on that, but you do get the...
Now, well, can I say that I've been a beta tester, John, and talk a little bit?
You are a beta tester.
Yeah, is it okay for me to talk about my experience a little bit?
Yeah, I clicked on the wrong one, but I wanted to show.
I didn't want to violate any of my beta tester privileges, but I found this to be just tremendous, John. Once you get this thing going, it is incredible. Even just the first map with all the little bubbles on them, there's a reason why people use those bubbles. They tend to tell a pretty interesting story. And the potential for this, I can't imagine. Like when I'm using it, there's only 50 companies. Not a lot of companies have sort of been integrated yet. Once this whole thing is integrated to the Canadian juniors, the Australian juniors, that share collective could be the go-to place for anybody wanting to do research and follow the commentary of people that are serious.
So is my screen shared now?
Yeah, I see that Purdy's Reward Underground.
Okay, so this is the one that I did, last week, and this is the beauty of this site is everybody who's a member, they can like copy my visualization, and then play with the numbers themselves, and you can have it private so only you can see it, or you can make a decision to share it into this arena. And here you can see somebody, it's a Sarah site, this did it way back in July 17, and his numbers are not very good for the story. And in fact, when you look at this, you'll be able to sort of see, okay, he sees only 2.5 million tons, a tiny little Mickey Mouse mine, and 2.7 grand, and this thing ends up being worth $30 million. So he has shared that into the space for others to see. And so I see this whole thing as becoming a whole new forum for people to discuss the potential outcome. And instead of like just arguing about who's stupid and who isn't, they can actually argue about your grade. You know, why do you think it's this grade? Why do you think it's this cost? Why do you think it's this tonnage? All this sort of stuff. So when you look at my thing here, and this is this annoying help thing, here you can see all of the stuff, all the information. You can look at what somebody else has done, look at the notes that they've attached, such as I've done there, and then you can try your own hand. And eventually, when this thing gets really going, you'll see dozens of people who have bothered to share one, and you'll start seeing patterns of where there is a consensus, who the outliers are. And this becomes a new form of gambling in these juniors, especially the ones at still the exploration stage. You can be a short and bet on the negative outcomes, where you say grade's only going to be 2 grams per ton, or you can like bet on the crazy guy who's putting in 30 grams per ton, where this thing's going to go absolutely to the moon. But this creates structure to the expectations of the market. It allows gambling, and there'll be shifts in perception too. For example, next time Eric Sprott wades into the Novo market and gets it cranked up, and of course nobody knows until a few days later that it was him, everybody will get excited and the mood will change, and you'll see it in these things as people go and change their numbers and switch it to being more optimistic or more pessimistic. This whole system will end up capturing information that right now is just dispersed. All you see is the chalk marks in the market. The chalk marks are manipulated by algo traders who bash it back and forth. The market has kind of ceased to function as a discovery mechanism about expectations in the market. And when you're dealing with exploration junior stuff, you're not like looking at what the revenues or earnings are going to be for the next quarter and stuff like that. You're talking about potential outcomes all over the map, but ultimately constrained by the geology, the information that the company has published. So hopefully this thing is going to go commercial in a...
John, before you get off of there, could you hit the hot spots? I want people to see what the hot spots, just how interactive and cool this thing is for discovery.
Yeah,
okay.
Let's just see what it hasn't been very active. Okay, you can see this thing if you just show the top 50 in the last week. You can see where it is and what projects have had all the action. So this thing's designed so that you can do two things. Like when I log on, there's two things I want to do. I want to see my world, the stock projects that I'm following. Is anything happening there? I'll go check it out, see which bastard has posted something hostile on my favorite thing that I'm long, and see who's joined me on the one I'm hostile towards and is helping bash it and all that. But then once I've taken care of all that business and posted my little comments and so on, then I'm literally going out on the highway looking for adventure. Then I go look and see what else is happening. Where is there a new hotspot showing up? Where are other people active? And then I can click on these things and say what's going on here. And at this stage, this thing doesn't have enough people active on it that I can really illustrate it. But you can imagine that once this gets going, and somebody could have some little project here. You could could have Garibaldi and its Nickel Mountain project, which has a wild $400 million market cap based on a bunch of visual descriptions of holes drilled next to what is a tiny little nickel sulfide deposit. And then you could start seeing what are the people thinking about it, and you could go in there and say, wow, this is the next Voisey's Bay in the making, or no, this is like a little flash in the pan. When they finally publish the assays, it's going to it'll collapse. So you'll be able to look for places where you can place bets in the market, where you can study the behavior of the crowd, look at its history, develop an understanding, and you'll also be able to check out the users, like who is this person.
Yeah, so users will become stars on there if they're good.
That's right. So I'm in there now as John Kaiser. You're not really supposed to have your real name in there. It isn't really showing me who's super active.
Yeah, but these are all just beta users right now.
Yeah, and so they're
when
not,
you open this baby up, that whole screen is going to be full of projects and where people are hitting the. It's I can visualize it right now, John, and I'm so stoked about that share collective. I'm going to try and wrap things up here, John. Was there anything else that you sort of seen over the last? If you hit stop sharing now, it'll go back to you on the screen, John. Is there anything you seen lately that you wanted to talk about, John? Or we pretty much covered it all for today?
I think for the purpose of figuring out how this works and just sort of demonstrating how you can go about quantifying the potential value, I think we've covered probably as much as we wanted today.
Absolutely.
And the key is, people get their head around the discounted cash flow model, how you do this back of the napkin calculation, and then start monitoring the news flow to try and get a handle on what is the grade going to be like, what's the tonnage going to be like, is it going, like you notice in one of their diagrams, they have a fault. So it's not going to be this simple undulating sheet, slightly undulating sheet. There's going to be local displacement, so you're going to have to do a lot of scout drilling to say where are the beds exactly, because it's just like, poor De Beers got fooled with the Snap Lake dike. It wasn't this big giant continuous sheet that you just start nibbling the edge of like some sort of pizza and mine it away. The things like locally displaced and that. And that's going to be part of the task of delineating these systems. Where actually are these beds? And then what grade can you assign to each little piece of this conglomerate bed puzzle?
Well, and and along with all those tools, we're going to be doing some more shows, John, where we're going to try and dig deeper into all the various different area plays. John has a little bit more work to prepare for that show, but next time I'm hoping we'll get to talk a lot about that, John, because I think that's going to help people stay ahead of the curve, be ahead of the curve, and that's what's really exciting about this big, what looks to me to be the greatest gold exploration project in my career.
So Alan, are you still sharing? Do you still see my screen?
I can see yours. I'm seeing your screen, yes.
Okay, so here's an example of a graphic I produced. the sort of shaded green and purple stuff. The green is Novo 100%. The purple stuff is Artemis ground. The yellow line is what appears to be the edge of the Pilbara, where it's still covered by rocks younger than basement. This little X stuff here, that's all exposed basement.
John, I'm sorry to interrupt you. I see your profile page on the Share Collective. I don't see this stuff you're talking about at the moment.
Oh, you're not in the Pilbara Wits Resource Center?
No, I'm watching your screen share, and I'm seeing on yours. Oh, now I see you. You're on there now, John.
So you can't see Maya?
No, you try your screen share again and show me what you wanted to. It'll work. Takes a little playing around with, John, but we'll get the hang of it.
You see it now?
No, I'm just seeing you're frozen actually. Huh.
Oh well.
Well, we better. Oh, I just saw something. Switch there. Oh. Oh, now you got me on the screen. That's weird. John, we've been at it for about an hour, even including including our stumbles and fumbles and everything. So I'm thinking we should maybe let's wrap it up, and we'll get another show going here soon. And next time we'll have a better handle on screen sharing and everything. I'm still getting a handle on it, John.
Yeah. Next time, let's practice without it being live.
Yeah, for sure. Well, John,
fair to our audience.
I just saw your Pilbara. All the green.
Can you see it? Is it on your screen?
Yep.
Okay, just to wrap up, to let everybody know, those little rectangles there are the different subbasins that the Geological Survey of Western Australia created back in 2001 when they did a published bulletin 144 on the Fortescue group. Anything that you see sort of inside this yellow line has younger rocks than the basement. These little X's here, that's 3 billion year and older granite greenstone basement. There's going to be no Wits 2.0 on that. Maybe there's little islands like this floating around, possibly on a smaller scale. This here over here is the Beaton's Creek area. This is the Marble Bar. All historical activity has been focused in that area, and the conglomerate beds just haven't yielded the kind of grade, but perhaps they didn't look hard enough. It's possible that this entire area has what we're seeing here. By the way, this is that whole CRA drill down to about 2,200 meters. The bottom 51 meters or so has the same sort of immature conglomerate as we're seeing up here, so it looks like at least here it's present. But over the next few months, Alan and I are going to use this kind of interactive thing to explore these parts. We'll start off in this area with the Artemis ground. We'll wander over here to where De Grey and DGO and others are, and we'll go exploring, and we'll find out who's got land. We'll look at the website, see if they're doing a decent job helping us understand, and we'll eventually walk our way over here. And then this part down here, this is where all the iron companies are. If this stuff actually exists all the way down here, these Rio Tintos, Fortescue, BHP, I think they're in there somewhere too, they could be sitting on very valuable gold conglomerate beds several thousand meters down. So we're going to be walking through this, exploring it. It's going to be fun. We'll loop back as more information gets available. But if Wits 2.0 hypothesis is correct and grades of 5 grams per ton start showing up at least locally, then we have possibly the biggest gold discovery and area play ever in the history of the world.
And we're going to be all over it, John, however it turns out. And I think that's what, you know, is quite compelling for the audience to keep tuning in, John.
Yep, for sure. Anyways, I'm going to sign off.
Okay, John, thank you very much again for, I'm going to say thanks for our audience. Thanks a lot. We'll do more shows. We'll tighten up the technology, make sure we get everything smooth. But John, as always, every time you come on a show, you drop a lot of nuggets of wisdom, and I think you dropped some good stuff on the audience again today. And so thanks a lot on their behalf.
Yep. And again, this link is on my homepage. To get to the Pilbara Wits 2.0 Resource Center, just go to the homepage. You'll find it off on the left side.
And that's whether you're a member or not, right, John?
Right. Yes. I mean, that part's free. And the profiles are free. The comments last 30 days restricted. Deeper stuff, you know, you have to
But John, before you market that free stuff too much, I really got to stress to people that John does a phenomenal amount of homework. He's now, you know, using technology to incorporate and make your life as an investor easier. John has been, of all the newsletter writers, he's been one of the top ones as far as picking out some of the home run plays. The amount of, for the cost of joining a membership, I think you'd be crazy not to if you're going to invest in this business. And I just got to do that plug for you every time I have you on the show, John. And as I said, I'm going to have you in my background soon too.
All right. Thanks, Alan.
All right, John. So folks, thank you very much for joining us. Another information-filled show with John Kaiser. He's been on top of a lot of great plays, doing his homework. Now he's helping us do it as well. And we're going to have a lot more shows coming up. I want to again say thank you to my new sponsor, Artemis, as well as all my regular sponsors, Sirius, Premier Gold Mines, Wolfden, Tudor Gold, and the companies I run. They're the ones who make these shows possible, and I want to thank them as well. And before closing, I always like to say the show is for information purposes only. Before you make any investment decisions, make sure to speak with your financial advisors. And on that note, I'm going to say we'll talk to you soon and have a great day.